All right.
Welcome back to Halftime Report. Joining us now is Nirmal Bang, Kunal Shah from Nirmal Bang. I'm so sorry for that. Kunal, hi, welcome. We were just having some fun in the break, and that's what's taken us all over the place. But I'll start with the metal prices, and we've seen constant gains into this one. Actually, in January 2023 until now, we have seen a higher single digit that is, and a double-digit gains as well for some of these metals. So whether it's copper, aluminum, zinc, tin, we are standing in strong gains onto this one. Multi-month highs actually. Would you say that much of the China factor and the fact that the Fed might raise interest rates by just about 25 basis points, all of that clearly has been factored in by now?
Yeah, so hi Manisha. Well, I'd like to explain it in detail basically what's going to happen in metals and what has happened. Number one, what has happened is China reopened trade. Remember, China is accounting for the 40 to 45% of the global metal consumption. So whenever economy like China opens up after COVID lockdown of almost 6 months, the pent-up demand is so much that obviously metal prices are going to respond. But like you said, on other side, there is a talks that Federal Reserve may not increase the rate aggressively, looking at the inflation number and all. So these are the two narratives which is going on in the market. But the third one, no one is talking about. The third one is right now, Fed is also reducing its balance sheet. There's so much money have been printed over last 2.5 years. Almost $4.5 trillion have been printed by Fed, and out of which $500 billion have been already removed in form of selling their bonds in the market. So in last 5 months, the Fed's balance sheet have shrunk from $9 trillion to $8.5 trillion. But now going forward, they are saying that for next 12 months, they are going to continue with this shrinking of their balance sheet, which is not very positive for metals on the long run. So right now we are enjoying the Chinese reopen rally in most of the metals, but perhaps 2 months down the line, we are going to see all metals will gradually go down, because more than the rate hike, the bigger story, the bigger narrative for the market going forward will be the reduction of the Fed's balance sheet. And if they are continuously now withdrawing money, and let us say their balance sheet gets shrunk by $1 trillion, obviously markets are going to feel the liquidity is going to get drained, and all the commodities will feel selling pressure. So I think once China again goes to the holiday next week, I think we are going to see most of these metals are going to cool off right now. I am not very, very bullish on metals from the fundamental point of view because of the balance sheet reduction by Fed, and that will drag down metals. So this rally, I think it's a bit overdone right now, and we are going to see from next week onwards, or perhaps from this week, prices may soften. So I have a contra view right now. Copper looks quite tempting to go short on 765, 766 on MCX. You can go short 750, 740 should be the target. And I'm not very optimistic from present levels when it comes to metals. We've seen the best on account of China. Okay. I think the pain is in the store.
Okay, all right. Kunal, Manisha, thank you so much for taking us through that conversation. That's all about metals. The markets have fallen slightly from the highs. So we'll do one thing, we'll slip into a short break. And on the other side of this break, we'll continue tracking markets and stock-specific action. Stay tuned.